Hello there. In this video we are going to explain how we can profit from market using only one pattern, rectangle pattern or the consolidation box. Price trends do not usually reverse on a dime. Instead, the up and down or down and up trends are typically separated by a transitional period or trading range, where buyers and sellers are equally matched. This transitional or horizontal phase has great significance because it is the boundary between a rising and a falling trend. If prices have been advancing, the enthusiasm of the buyers has counteracted the pessimism of the sellers up to this point, and buyers have optimistically bid prices higher. During the transition phase, the battle between optimism and pessimism becomes more or less even, until finally, for one reason or another, it is tipped in a new direction as the relative weight of selling pushes the trend down. It is the breaking to post-transitional new low ground that alerts the trader to the fact that a reversal in trend has taken place. In other words, when prices fall below the trading range, a sell signal is given. Rectangle is a reversal or a continuation pattern. This depends which phase prices and where the breakout happens. The first setup of previous week was British pound Australian dollar. Prices consolidating inside rectangle pattern, we are waiting for breakout to confirm a trade. We have a strong breakout which is good confirmation, but is not in a good level to enter right away. Waiting for retest to enter a trade. Price retested this setup could offer us a 2-risk reward trade. How to manage the trade? When price reaches previous high move stop loss to entry level. This is a key level and price can create a double top pattern against our position, so be aware of this fact. As we see price failed to break above the higher high and dropped sharply. This pair offer us again the same scenario but this time in downside direction. Price breakout, retested and reached the potential target. Rectangle strategy is very effective and if you use correctly will bring great results.
If you want to join Premium Channel, contact us on Instagram for more details.
Next setup was Canadian dollar Japanese yen. In this setup we used an AB equals CD pattern. First of all we see that price is touching a resistance level on 4-hour time frame. When we zoom in on 1 hour, we see an alternative 1.27 AB equals CD pattern fully completed. Candlestick pattern confirmation on the top. This setup could offer us a 2.8 risk reward trade. Price reached 50% and I prefer to move stop loss to entry level and take partial profits from the position. Managing the trade is very important. Trade closed at break even. Next premium setup was Euro Australian dollars. Price breakout rectangle pattern or consolidation box. I was waiting to enter a buy trade at reset. This level correlate with 0.5 Fibonacci level. Price retested exactly as we expected. This setup could offer us a 2-risk reward trade. Price reached the target perfectly. Sometime if you see strong momentum you can hold some part of the trade more than initial target. In this case I closed at the first target. If I held some part of the trade till the next resistance the risk reward could have been more than 6. Using the rectangle pattern, as simple as that.
Make sure to like and subscribe, this encourages us to make more helpful videos in the future.
Next premium setup was British pound New Zealand dollar. We are using the same strategy drawing a rectangle, in this case we can call it a double bottom too. Price breakout, and we are waiting for retest to enter a buy trade. In this setup price made a small pullback and then bounce in upside direction sharply. We missed the entry in this setup. Waiting for retest is the best decision trading this pattern on a long term.